Well, what's going on with you? What's keeping you busy these days? I see you online. We don't get a chance to talk too often, but yeah, I'd love to hear what you're doing.
I'm always dabbled in a lot of different projects. So right now, like we just in April closed on our 36 unit in Leduc, Alberta, and then I'm working on a development of 18 units here in Calgary, and as well a land development out in Three Hills, Alberta, with modular build
Awesome.
on a flip.
How the flip's going?
Well, we haven't started. I just got it under contract
Okay,
yesterday. We're going to get early access before closing, but I'm pretty excited about this one.
nice. Oh, that is exciting. And it's always good when you can approach it from both the development side and just the renovation side, that you can make that determination on what is the actual best use for the property. Where it's not like I only do development, so I have to tear it down, or I only do renovation, so I have to fix it up. You get to actually look at it and see what can be.
Yeah, yeah, exactly. And I mean, like, development also takes a while. From start to finish, it depends how big the project is, but from start to finish, it's usually 1 to 2 years. And a flip is also depending on how big the project is, but let's say it's around 6 months. So, like, as a real estate investor, if you do this full time or any sort of, like, I would say entrepreneur in real estate, your income is not usually consistent. And so when you spread out, like if you're doing different projects and have different timelines, instead of getting like $300,000 at one point 2 years down the road, if you kind of got a couple of different pipeline projects, you still have somewhat of a more consistent revenue source, I would say.
Yeah, I joke that, and this is a true story. So it would have been just the first year of COVID, and my business partner Randy, I got him for Christmas a loaf of bread and a stick of butter, and I said we have to stick to our bread and butter stuff because it's so easy, so tempting to get caught up in the big dealitis, and uh, you know profitable at the end. But if it takes you 6 years to get there, you need that interim. Yeah,
Yeah, yeah. And
and you're helping.
everyone's on a little bit of a different journey, but if someone's in a full-time real estate investor position or thinking that they want to get into becoming a full-time real estate investor, hopefully it becomes part-time, then that journey is going to look a little bit different for everybody. But I think the revenue source is huge. It's the same thing as owning a business. Like your cash flow is what keeps you running.
Yeah,
Um,
cash is king.
yeah.
No, 100%. And you're helping other investors look at projects the same. Is that correct?
So mostly, like, I mostly syndicate my deals.
Yeah.
Um, and I'll bring in the right people and partners into my deals. I just started getting into helping other people because I found there was a big, like, I get a lot of people reaching out to me, which is absolutely, like, I love to help people. And that's why I'm on here with you today. Like the more people that we can help and get to, and having the right conversations, is great. But you can only it's very limited because they're not here asking us the questions that they have questions to.
Yep.
And I find a lot of the time people, they don't know what the next step is. Like if they're at the beginning, they're like, I don't know if I should do wholesaling or flipping. If they've done a couple of flips or they own a couple of rentals, they're like, I'm ready for that next step, but like I don't really know what that next step looks like. And there's a lot of noise out there. There's a lot of obviously talk about CMHC MLI Select, and it's this amazing new product, and it's pretty good, but of course people need to be educated on it. And there's a lot of coaching programs out there too. So I think and I look back down my journey and what made me successful was basically just having the people around me that I could lean on or I could actually partner with and bring onto the deal if I didn't like I think of my first multifamily deal. It's like, okay, I've done a lot of real estate, but multifamily is very different. There's more moving parts. There's different financing. There's, a higher risk if you don't know what you're doing. And so I partnered with someone who did have that experience basically. And it's that skill that is worth more than the actual multifamily deal because that one skill of learning how to do the multifamily, and now you can just keep rolling with it basically.
Yeah. Is that your number one question? So the number one question that's posed to you. So if you're talking to investors and they either come to you formally or informally, like the number one question you hear right now, is it what do I do next, or what are people looking for?
A lot of people are like, I don't know what to do next.
Yeah.
Yeah. Because at different stages in eras, there's always like the most popular thing that people are doing, right?
Yeah.
So right now, everyone's hearing about multifamily and MLI Select. That's what everyone's talking about. Now, before CMHC and MLI Select came out, there's a huge thing on flipping because the market just also kept going up and up and up. So you really couldn't like it was hard to lose on doing any sort of flip because that short term, everyone would win no matter what on a short term deal.
Yeah. Even if you're
Um,
wrong, you were right.
you probably won anyways, right?
Yeah.
So and now that the market's iffy and going down, obviously that kind of pulls back on a lot of people wanting to do flips because of the extra risk involved with a downward market. Um, so right now, I think it's still MLI Select. I mean, it's been like this for a couple of years now. Because the more people that do it, the more people that talk about it, the more people that hear about it. And we always talk about being too late to the game sometimes. Because obviously, if you did this 2 years ago, again, like you could do any deal with CMHC MLI Select and you'd probably win. And then the rules got harder and stricter and more benchmarks and more things changing. And then it got riskier. But that's like with anything, if you see the opportunity faster than anyone else, you're gonna win the most,
Yeah.
and putting yourself in that luck. After it's already kind of run its course a bit, things change. I think CMHC is not going to be going away for a long time, but it's the same thing with anything else that's been introduced. Like Airbnb, for example, right? When it was like nobody talked about it, but the people in the beginning were making so much money. And then they're still doing Airbnb today, but it's a different game than when it was in like 2016, right?
Yeah. Yeah. If they used all that cash flow to pay off their mortgages, they're winning,
Yeah.
right? But it's rare.
Yeah.
My concern, and again, I've been talking about this for 6 months now. They're an insurance company, so they have to mitigate their own risk. They're also a crown corporation, so again, they've got certain targets that they want to hit. But June is notoriously the month that they make changes, and I'm trying to keep up to date. I'm trying to look for the source of information on this to see what people are announcing, or if CMHC's changing the rules, because this is no exaggeration. And I've told the story before, but we were sitting with Toby from Building Knowledge talking about some of the environmental sustainability options for our one project. And we are going over, how do we make it hit this point and these points and blah blah blah. Because everything at the beginning of the program was geared toward the three tiers, and it was kind of balanced. The next day, and that's not an exaggeration, it was like if we were talking on June 8th and June 9th came out, and it was like slap. They're making all these changes, and really getting to where they should have been maybe from the beginning, but all about affordability. And so if you didn't have that affordability component, you just didn't comply with or you just couldn't hit the points. Like to put the environmental sustainability stuff in, like it was better than net zero. Like you had to, it was so far reaching that
Yeah.
it was virtually impossible that alone. So with the success of the program, I caution people on a fairly regular basis, just, hey, at any point, CMHC could just go, you know what? We've hit our targets. We're overweight in this category. We are going to adjust the program dramatically. Not that I'm using that as a sales pitch to people. Say, hey, Like if you want to do it, let's get it going now. Um, but maybe a little bit. So
So, I, and that's the thing. I'm not steering people away from getting into it. I think we have to go back and understand the fundamentals, right? The fundamentals with the program was to increase the rental supply, right?
yeah,
So people that have been, let's say, buying existing properties and then raising rents and then doing the refinance and then like their deal won't work unless they get that refinance with CMHC MLI Select.
yeah,
That's when you start getting into a little more trouble because like that wasn't necessarily the point of the program, right? You
yeah,
can do that, of course, but the point was to create more rentals. And so I think if to safeguard yourself from it is looking at what they want, what projects they really want, and making sure that they fit within that. Of course, the benchmarks numbers expenses just changed, so now we know how to run those numbers. But before like there was a lot of scariness because it was like, okay, the underwriting is changing, and so this could dramatically impact my deal of it being you know, a deal that's like not going to work anymore after that.
yeah,
So it's better actually now that we know what the benchmarks changed,
yeah.
which they didn't actually change that much, which is good, but it was that anticipation and that uncertainty that's risky, I would say. So there shouldn't be obviously much more changes going forward, but I mean, that's like a knock on wood thing. It's always going to be evolving, but it's always evolving to their main goal and with the economy. So a lot of people also were talking about it's people that also kind of want to abuse the program, I think is where a lot of these horror stories can start to happen. Is they, for example, the GST rebate, right? So people would do a 5% down and then they would get their 5% GST rebate, which now they're aware of this kind of loophole, I guess, and they're kind of like avoiding that because they don't want you to have a free property in the end. That's not the point of the program, is to have a bunch of free properties, right? You need to have skin in the game. The
It's a
other
great
thing
program,
is
but yeah,
it's great. I mean, and that even with there was a change that happened with title. So people were buying um, a street of single family homes and grouping them all together. And I've done this, but they were grouping them all together and then getting CMHC and 5% down on all of it. But then they were realizing that this was actually taking these homes away from first time home buyers, right? And so then they changed the rule so that the title had to be there had to be 5+ units on one title. You could still group them, but it had to be 5+ units on one title. So people were in these deals with all these single families, and then they couldn't close on them because they changed the rules on that. And to me, it's like I knew that like it was great while it lasted. People took advantage of that and knowing about that loophole. But like that's the thing with these loopholes. They're great until something quickly changes. So if
yeah,
you are fundamentally ready for that change and you're like, okay, this really does fit within their framework, it's going to reduce a lot of that risk.
yeah. Well, I'm going to give a free shout out to Mark McKinnon and his game board design because he was a city councilor in Guelph, and I love the way he approached everything because in his past life, uh, he was doing board game design. And the one thing about board game design is you have to look to make sure there are no loopholes. Like it's one of those things where if this happens, you have to make sure that this doesn't, or so forth and so forth. So it was great to talk to him about, hey, well, two ways. One is how would you exploit this if you could, and
Mm-hmm.
two, what rules have to be in place so that it's not exploited. And that's what, like, in all honesty, it made him a phenomenal city councilor because again, he's just very rules oriented. And because most people, when they approach things, they don't look at it that, well, if this happens, oh, well, the spillover is going to be this, and if you do this, then the spillover is going to be that. And it's we don't live on an island, so to speak. That there's all these ripple effects every time. But
Hmm.
no, that's interesting. So as you see it right now, with the way things are set up, agree or disagree that it's they're going to continue to move forward, or do we have to worry about sort of the finite timeline on the MLI Select program?
I I don't think there's a finite timeline. I mean, they've talked for they've the numbers have shown that we're on a deficit. We're on a huge deficit. And even with all of this, these programs to help accelerate it, we're still behind.
Yeah,
Now, that is behind in the whole Canada, right? There's certain markets that are now getting oversupply, but if you look at the numbers for all of Canada, it's still the deficit.
yeah,
So it means the program is going to continue to shift. It's going to not work for certain markets, but as a whole, it's meant to help those markets that need it most. Although,
yeah,
to be honest, I think it's working really great in Alberta, and I don't think it's working very well in Ontario. So I foresee changes
yeah.
happening so that it actually works more for those, for the areas where that it's not working well for that actually need it. That's where the changes are going to probably end up happening.
Yeah. Well, the city that I'm sitting in right now, so Guelph, Ontario, and I do this trivia question all the time, but and I won't pose it as a trivia question this time. So in 2025, so all of 2025, and this is a city of like 140,000 people, right? All of 2025, they had 12 single family building permits for the entire city. But here's the catch: they also had 18 demolition permits basically net -6 single family building permits, because not only were they only building 12, they were tearing down 18 single family homes. Um, and then the city of London, they were pretty proud of the fact, and again, I'm not taking away from their planning department, but they're pretty proud of the fact that they actually maintained kind of I'll say a flat line of building permits over the course of 2025. 80% were for purpose-built multifamily rental, right? Like
Hmm.
there's just and one of my favorite expressions is that the pendulum never stops in the middle, and it's like they don't build multifamily for decades, and then all of a sudden they swing in the complete opposite direction, and that's all they build. I don't know. It's tough to learn lessons.
And that's the thing, we're never going to be balanced, right? It's never going to be balanced. So there's always going to be an undersupply of certain stuff and an oversupply of other stuff. And depending on, it all comes down to the numbers, right? For the investors in this country, because the investors are the ones that they're the ones that are developing, right? And they're the ones that usually also make things happen. So if it's something, there's usually something wrong. It's not just CMHC that's contributing to it. It's also obviously the development process that people have to deal with. But that comes into the numbers. If the development is too hard and they don't make enough investment or like the profitability versus something else, they're just not going to do that. And so, I mean, it's not like I just hope that they understand this, and I think that they do, but I mean, here we are.
Yeah. Oh, so you're super busy right now. You're taking on coaching. How are you finding investors? What is their mindset? I assume, and assumption is the mother of all f up apparently, but I'm still going to assume that they are excited to work. If they're excited to work with anybody in the province of Alberta, they're going to be excited to work with you, and they're going to be saying, "Hey, let's work on the next project, and here's my money. Take it. Just let me know how I do." But how are you finding sentiment right now for real estate in general, whether it's nationwide or specifically in Alberta?
I think people are still drawn to real estate, and it's because it is a well, for one, like our cash is depreciating faster than ever. And as we know, the reason that real estate goes up is because cash depreciates. And so like that, just that right there, I think is one of the main reasons people are still wanting to be in real estate. Now, of course, the strategies with real estate are changing. It's ever changing, but with an economy, it's still changing. There's always going to be investors that are like, okay, I can't handle this uncertainty. And then there's people that are like, I understand the fundamentals of investing. Actually, I think that's probably where the biggest divide is that people don't actually have uh, the fundamental understanding of investing as like just investing in general. Because you're not investing in real estate, you're investing, right? And so most people flock to real estate because they can understand it, but they actually don't understand the investing principles behind it. That's actually probably the biggest thing that I see because I'm like, do you know the difference between cash on cash and cash on cash flow? Do you know the difference between return on investment and return on an IRR or ROE? And I know these are a lot of concepts, but like even just basic understanding of return on investment, and it's like, okay, if you're going to invest into real estate and you're going to make a 10% return on investment, it's like you might as well just have invested in the stock market and equally as risky, let's say, and a lot less headache. So
And
people
more
need to
liquid.
understand. Yeah, and you're more liquid, exactly. So, and that's also kind of why I've done this like financial mapping for people because everybody's time is different. How much time they can put into something. Everybody's financial situation's a little bit different. Um, Everyone's goals are a little bit different. Timeline is also different. So if my timeline for my goals is 5 years, but someone is nearing retirement, like they might be able to handle more risk, but should they also, right? So there's this a big give and take, and a lot involved with deciding what investment options to choose. And it's not always going to be real estate.
Yeah, yeah. In the country of Alberta.
Yeah.
Um, what's the sentiment there for that concept?
Well,
Is it just a few very loud people?
no, no. It's most people that have reached out to me, and those people are people that have typically bought like their primary residence, or they've done a flip maybe. They've dabbled a little bit in real estate, right? And they've probably done well again because of the last 5 years. If you anything that you had before that or got within the last 5 years has gone up, and it had probably really good interest rates. So their sentiment is like, oh, I've won in real estate, and I want to keep getting like I want more, you know, to do more in
This is
real
easy.
estate.
It should be every year.
Exactly.
Yeah,
I just want to bring it. I constantly just bringing people back to understand the fundamentals
yeah.
because maybe what's next for you, based on your situation, how much money you have, your connections, um, you know, and your risk tolerance. Because like I'm also I wasn't investing in real estate in 2008, but I'm trying to think of what happened in 2008. There was people that made a lot of money, and a lot of people lost a lot of money. And then when they lost money, they never got back into investing again, and they've actually set themselves back. And I'm trying to avoid people from what's happening now. Of course, it's uncertain, and I don't have a crystal ball, but I want to protect people so that they don't get, stuck in a position that they shouldn't be have been in, based on what has worked for them in the past.
Yeah, yeah. 2008 was a crazy time. So we had some of the mortgages that we had offered at that point, um, like the ninja loans, no income, no
Yeah.
jobs or assets,
Yeah.
just a pulse and flag them here. We got you, we got you.
Yeah.
Um, and in all honesty, it was a ton of American influence coming into Canada, and literally American companies who said, "Oh, this country is ripe for us to come into. So what we're going to bring our programs," and they were so foreign that people were like, "Oh, this is cool." But yeah, Wells Fargo accredited. There's all these different lenders that just were doing absolutely bonkers things. Um, but even CMHC and Genworth at the time now, they were doing 100% financing on rentals with a 40-year amortization. Um, so, as long as you could get land transfer tax and, well, we have land transfer tax in Ontario, but as long as you could put together a few $1,000s to cover those costs and legal fees, you could buy as many as you could and hope that they cash flow. So it was
Sounds
It was,
familiar.
yeah, it was going gangbusters. But this is the whole ripple effect that I talk about, where I wish I had been in that room because somebody sat down at the table with CMHC or whomever and said, listen, we should go to a 30-year amortization. I said, that's a great idea. Let's do that. And then they came back and said, you know what? They're doing 35-year amortizations. So we should probably do that. Okay, let's do that. So they and then 40 years. And in the span then of 6 months after the final increase in amortization, they had it back to 25 years. Like it was almost instantaneous. Like, so the same girl came into the room and went, yeah, you know what? We were wrong. Like, I just want to know the mindset. And same thing with some of the self-employed mortgages. Like it was, hey, we're going to do this. We're going to operate under this program. And by all accounts, they were extremely successful programs, and done away with just as quickly. And I ask the question, I'm like, okay, well, how many defaulted on this self-employed mortgage? Like, an insured self-employed mortgage, because the criteria to qualify, although it was basically stated income, you still had to prove a lot. Like it was a thick file at the end of the
Hmm.
day. But I'm like, what's the default rate for this program? Oh, we don't actually have numbers on any one specific program. Like it's all one blanket thing. I'm like, how do you know if it's successful or not? Like it just is mind boggling.
Yeah.
But what's concerning in Ontario right now are some of the default rates. And municipalities like Brampton, they've just shot through the roof. Um, I would say wholeheartedly that some of those cases that are now defaulting in any municipality, not just Brampton, but were based a lot on fraud. Um, you just hear rumblings that job letters were being produced by the same mortgage company that was submitting it. Like it was a 2,500 bucks and you get the whole package. We'll give you NOAs, we'll give you job letters, we'll give you everything. It's just bonkers.
Hmm.
And now Ontario for a decade was well below the national average in terms of default rates, and it shot through the roof. Um, Still, like less than 1/10 of what the default rates in the US are, right? Like if they're 3, 4, 5%, we're still 0.3%, and that's in arrears. So again, I know it takes a
Is
while
that,
for
sorry, is that
no
indexed on our population?
on mortgages. So on the number of mortgages that
Mm.
are outstanding. Um, and I remember speaking to the business development manager with Canadiana, um, and it was a monoline lender. And I said, hey, like just curious because you guys decline everything. Your underwriters are goalies. Like it seems like their entire job is to keep deals out. So like do you guys have an astronomically high default rate? Is this why you're turning away deals? He's like, no, we've got like one. And I'm like, 1%? I'm like, that's high, right? Compared to national. He's like, no, no, no. In all the years that we've done business, we've had one power sale. What? He's like,
Mm.
hey, you're preaching the choir. Like, we absolutely know as a business development manager whose income was tied directly to the number of deals that they did. He's like, no, I want to do more deals. I'm trying to do more deals. It's just, you have a couple deals go funky with other lenders, a couple underwriters get fired, and then everybody's scared to do anything, right? And it's if it didn't check off every single box, there was no way that it was getting done. And we're going through the same thing in Ontario about with development side, right? And I understand, how we want to check all the boxes and make sure it fits. But even some of the projects we've brought to the table, our first meeting was okay. We want this to go smoothly. We want this to go quickly because the faster and smoother it goes, the better it is for us and for our investors. And we just want to put this through and so ultimately, you tell us, what do you want us to build? And you think that the planning department's on the same page as the council. So they say, okay, well, hey, you know what? Don't do single family. We really want to see some higher density stuff. So like townhouses or apartments, like what can you build? We're like, you tell us. Like we've got 10 acres to work with. We can and we had a 10-acre site. We kept 5 of it green space and pathways, like trail system to get from a park down to a marina. So we were pretty excited about this, and it's great. Unanimous decline at council. And this is exactly what your planning department told us to put together. And so here we are, and we are in our 8th year. So we purchased it in 2018. It's now 2026, and we're finally going to the Ontario Land Tribunal in a couple of weeks to finalize this thing. And this will be our second round at the OLT. It's painful. So when
Yeah.
CMHC comes out with a report that says, you know what, it's not interest rates, it's not immigration, it's not all these other things that everybody's pointing fingers at. It is strictly red tape that is, dragging housing starts down by 30% and increasing costs by 10%.
I was just going to say it's also this cost increase
Yeah,
um, of development is ultimately passed to the customer.
yeah, yeah, and that's through rent. So even on this purpose-built rental stuff, it's still passed on. Like they have to do it, or they go, you know what, we're just not going to build. If
Yeah.
it's not feasible, if our costs are here and the ongoing income or the sale price is here, we're not building. Right?
Yeah,
It's
exactly. The
real
numbers and
easy.
the headache is what it comes down to.
Yeah, yeah. So anyway, that's what we're dealing with in Ontario.
Yeah,
Um,
yeah. And
it sounds
that's,
like they're a
yeah,
little bit better in Alberta.
I think, I
Okay.
don't know. I mean, I think it depends on the municipality a lot of the time.
Okay.
Um, so my development in like Three Hills, Alberta, it is a really small town, right? So
Yep.
it's really easy to talk to them. And they are desperate for like no one's gonna go there and build anything. And so in Alberta, we have a lot of these small towns that are basically artificially capped because no one will build there, but no one can grow their businesses either. And
Yeah.
so, for example, we actually partnered with a modular home builder who's
Yep.
in Three Hills, and he's like, I'm pre-buying your stuff because I can't, my business is growing and I have no housing for my people. I don't have
Yeah.
like they're in room rentals, and there's just nothing. There's no rentals. There's nothing to buy. So anything that came to on to like to sell, a house that had like foundation issues would sell quickly because like there's just nothing.
Yeah.
And so like Calgary obviously is a huge, the hugest, biggest city in Alberta. So like that problem doesn't translate necessarily to Calgary. But like I mean, so it just depends where you're developing. I mean, that's personally kind of why I've gone to these secondary and tertiary markets, because I just didn't want to deal with the big city problems.
Yeah.
Um,
Our the mayor in Guelph. So Mayor Cam is absolutely fantastic, and I'm a big supporter of him. Unfortunately, he's now retiring. The term is up at the next election. Um, but he's out in Edmonton right now, and they're basically just going on a tour. Various, I'm guessing, politicians and staff yeah, for the city of Edmonton are showing off some of the things that they've come up with and all that. And yeah, not taking anything away from Cam. And Cam, if you're watching this, this isn't a shot. I'm trying to get him on here to talk, and if he sees me talking about this, he may not. But I can't believe that you look at some of these best practices and examples of, hey, here's what we're doing, how this isn't shared on a regular basis between different municipalities. And it's like, if everybody's got the same crisis and someone's figured out how to do at least this little tiny bit, then share it with everybody. Like this isn't rocket science. And it just seems like mind-boggling that individual cities and towns can't figure out how to do these things. And part of it, what makes it even more surprising is some of the revolving door that we've dealt with it and the different planning departments of various municipalities. You would think they would learn things because they keep switching from city to city, town to town, into different planning departments because which is frustrating for us because we're dealing with different people all the time. But you would
Mm.
think they would like, oh, I'm going to pick up a little bit of this and be able to bring that to the next city and town that I'm at. But it just seems like it's dealing with a lot of the same
Well, what I'm
mentality.
also finding is that the people that are making the decisions, they are not investor minded and they're not thinking how the developers and the investors that are making this happen, what they're thinking.
Yeah,
And they're like, this is what we want, but it never happens because it's like, well, the numbers aren't there. So no one's like, they're the ones making the decisions. And though the people are actually implementing, it's like, no, we're not going to do that.
yeah.
And
I've
then here's
been
what
very
will work
happy.
for us. And then it's like, no, we want this. And then it just never happens.
Yeah, no, I've been very happy with the number of views that I've had on some of my Facebook posts, and you know, I'm not used to getting because I don't post a ton on Facebook and that sort of thing. But I have 300 comments back and forth, and the big expansion that's going on in Ontario right now is regarding nuclear power. So they've allocated 300 million to the expansion at Bruce Nuclear, which is monstrous. I think it's going to be very oil sands esque in terms of the opportunity that was driven to Fort McMurray. That you have a very small set of municipalities along bordering Bruce Power with a huge influx of people having to live and work there. So it's one of those things where it's like, okay, well, uh, you need housing, and then you need all the spillover stuff. You need not just housing, but someone pointed out like, hey, we need childcare. Like if you don't have that, we need more doctors, we need more hospitals, we need more XYZ. Absolutely. So who's planning for this? And the only people that are building this are, it seems like, are investors, and builders and developers who want to see this move forward. We've been calling for it for a decade. We know that it's needed. We know that even without the expansion, there's still a housing shortage there, and there's people that want to move to the area that can't. Simply because, and I even talked to our MP, who's now retired, but Lloyd Longfield, nice guy out of Guelph, and he was pretty proud of the fact that they were reshaping the rules around Airbnb and short-term rental. And I said, time out. I said, you're limiting this, and other municipalities are putting their own safeguards in this. The same municipalities that we're trying to build in. Well, guess what? You don't have enough tradespeople to build the houses. Where do you think they're coming? And where do you think they're staying? They're trying to stay at Airbnbs, and you're shutting that down. Like you're nuts. You just, again, the trickle effect. Like
Yep.
you do this, and all of a sudden it's like, oh, well, I didn't realize that was happening, right?
And most
But
of the time it's too late. Most of the time, like they don't realize these things. They make the changes and then the ripple effect happens and they're like, we don't know what to do.
it's certainly that level of frustration that I posted the other day that I was very proud of myself because I had three things that I got ticked off about, and I don't get ticked off too often. Like it seems like I get riled up here, but I'm actually happy right now. But I get frustrated about certain things, and I said, you know what? Before I post anything, I'm going to wait my 24 hours, and that was our rule in baseball. So when I was coaching baseball, I was like, hey, you know what, parents, before you send the email that little Timmy didn't get to play, um, let's wait 24 hours, and if you're still mad, we'll have that conversation because you're going to be in a better mindset. I'm going to be in a better mindset. Everything, but it's frustrating that um, they don't take the onus for themselves. It's like, hey, you know what? I made the rule. I'm following the rule is not my problem. We've actually invited the CAO of a certain municipality, and I won't say where, but said, listen, you or someone on your team, I want you to take onus of one of the projects that we're doing and sit in on it from start to finish. And then you can see where the shortcomings are. Or maybe it went great, right? But ultimately, I want you sitting on this side of the desk so that you can see what's going on. And until you're willing to do that, I just know that the mindset out of your office is not going to change fully. There's going to be that, well, we did what we were supposed to do, not a little bit extra, but yeah, it's frustrating.
Yeah.
But anyway, where I was going with that 5 minutes ago. So the level of comments that I've been getting has been great, but some of the comments are like, well, Bruce Nuclear needs to build their own housing. Like, what? Right? Oh, they need to do this and they need to do that and carve off a piece of land on their own site to house these workers and that sort of stuff. I'm like, all you see are problems and stop signs and issues. How do you not look at this through the lens of an investor and go, oh my goodness, this is great. I know that there's 4,000 people coming to this area where there's only 40,000 people currently, and I have the opportunity to invest in housing or have a store that caters to these new people or but I'm going to put it all back on, oh, they have to do it because it's their employees. Like, come on.
It's the easy answer, right?
Yeah.
I mean, we've also been very symptom driven. I think a lot, like our whole mind, a lot of our mindset is here's the symptom, here's how to fix this symptom. It's
Yeah.
not, it's not how do we fix the root cause.
Natasha, this has been absolutely fantastic. I thank you so much. I actually have to sign off now, but is there any way we can get you back in a couple of weeks and continue on?
Well, thanks so much, Brett, for having me. I mean, I mean, I could talk about this all day long. So I just wanted to appreciate you having me on the podcast, and kudos to you for like starting this. I think like this is the information that people need to hear. So I'm really glad that you started the podcast.
Well, they certainly need to hear you. I'm a big advocate of yours, and I love being part of your Facebook group. We'll make sure that everybody can find it easily on Facebook or whatever platform they link through to. But no, there's some absolutely invaluable information. And if they're out in Alberta, holy cow, they need to link up with you and figure out a way to find out exactly what you're doing. I don't know if we're allowed to say invest with you, but anyway, invest with you.
Connect with me.
So connect. Yeah, absolutely. We'll let you do the investment part. All right. Thank you so much.
Thanks so much. Bye for now.
All right. Bye for now.